Good afternoon, everyone. A warm welcome to another session of the Knowledge Series by Go India Advisors. I am Priya Sen, and joining me is Mr. Rakesh Arora, Managing Partner at Go India Advisors. Today, we have with us Sigachi Industries Ltd, India's largest manufacturer of microcrystalline cellulose, MCC. Representing Sigachi, we are pleased to welcome Mr. Amit Raj Sinha, MD and CEO, and Mr. O.S. Reddy, CFO, Sigachi Industries. Mr. Amit Raj Sinha, MD and CEO, he is an MBA from Indian School of Business, a BTech and a fellow of Institute of Engineers. With over 20 years of experience in pharma and fine chemical, he has played a key role in strengthening Sigachi's R&D division. Mr. O.S. Reddy, CFO, is a chartered accountant and an MBA from Sikkim Manipal University with over 30 years of industry experience. He leads finance and accounts and compliance at Sigachi. Before we begin, let me give you a quick overview of Sigachi Industries. The company is the largest manufacturer of MCC in India and among the top 5 globally. It has strong presence in the pharma ecosystem, offering pharma excipients, API intermediates, film coatings, and FNN coatings. Sigachi also has strong presence in the operations and management segment. The company operates 5 state-of-the-art manufacturing facilities located in Hyderabad, Sultanpur, Jagadia, Dahej, and Raichur. Its MCC business has been growing at a 21 CAGR over the last 5 years. The company has a production capacity of 21,000 metric ton per annum, making it the largest MCC manufacturer in India. Beyond MCC, Sigachi has seen strong growth in operations and management business, which has also expanded at a 31% CAGR over the last 5 years. The company has also entered the API space with the acquisition of Triax Bioscience in August 2023. Financially, Sigachi has delivered strong growth with a 5-year revenue CAGR of 25%, EBITDA CAGR of 24%, and PAT CAGR of 25%. For 9 months FY25, the company had reported strong financial result. Revenue from income stood at rupees 3,721 million, marking a 26.22% YOY growth. EBITDA came at 835 million, reflecting a significant 38.47% YOY growth, and PAT reached 542 million, up 29.04% YOY. With a strong focus on R&D, cost-effective manufacturing, and top quality standards, Sigachi continues to expand and strengthen its position as a trusted partner for global players. With that, I now hand it over to Mr. Rakesh Arora, who will take us through the Q&A and further discussion. Thank you, and over to you, sir.
Thank you, Priya. You can stop sharing. Thank you. So, Mr. Sinha, to start with, you have built such a leading organization, which is one of the largest in the world. I mean, how did you start, and what was how did you narrow down on MCC? It's a very niche field. So, can you just take us through your journey of building this amazing organization?
Thanks, Rakesh. The organization was started by Mr. R.P. Sinha, who was had specialization in the cellulose field of excipients. So it was him and his founding team who started the organization. I joined Sigachi 20 years back when Sigachi was still a smaller company. We were, I think, at around 17 crore sales then. And then since then, we have just continued to focus on one product and build on our strengths. And thankfully, the market for this has continued to grow because this is a natural product and widely accepted in various applications. I think we have had good tailwinds with us.
So what is this product, MCC, and how it is made, and what are the key use cases for this?
So MCC is, I would say, one of the most versatile basic excipient in the pharma industry. Just about any solid oral dosage form, in fact, even liquid sometimes, would take MCC as their main binder. And when I say that, I would say that, if the tablet weight is going to be 800 milligrams, most of it would be cellulose, which is MCC.
Okay.
Part of it would be active ingredient, which of course has to do the job, but it is cellulose which helps the formulation guys tablet it properly, stabilize the API, give it a solid bulk, and subsequently break it up in the body so that the API is absorbed. The content uniformity of the API, the flowability, the compaction, hardness, I mean, all the tablet properties come in from this particular binder. So it is a very significant step in the formulation industry to have the right grade of MCC. Just to
Okay.
tell you, Sigachi has more than 60 different grades of MCC, and that's one among the highest in the world.
Okay.
We have cellulose grades for any kind of an active ingredient, whether it's a very small particle active ingredient or very coarse, if it is sticky, lumpy, any kind of active ingredient which is going in the solid oral dosage forms, Sigachi has a solution for that.
Okay.
In terms of input material, we do have our input material coming in from the pulp industry. And from the wood pulp, we have a certain process wherein the pulp is digested, it's cleansed, it's depolymerized, and subsequently dried to the specification of the formulation needs of our customer.
Okay. So, sir, when you say like 60 different, I used to think that it is like simple material, but it looks more complex than that. So,
So
what is this technology? It is in-house developed technology. What is there any competition which is available in the market? What is where the technology has come from?
So the broad technology, of course, has been available since more than a couple of decades. However, the actual sustainable competitive advantage is actually lying in the way we make the process and fine-tune certain equipments, certain parameters along the way.
Okay.
And that is actually the niche, and that cannot be replicated because it is specific to the equipment we have. In fact, I would say that the same equipment in my Hyderabad unit would behave differently on a certain set of parameters vis-a-vis the same equipment in my Dahej facility.
Oh,
So that replication is a challenge, and that is what differentiates Sigachi to be able to, kind of charge a premium or kind of differentiate ourselves from our competitors.
mm-hmm. Okay. So, sir, meaning how many players in India would have this kind of, facility or technology? Because what I understand is that even some of the large players like Birla and all, take your services to maintain their plants. So clearly, it is a very niche kind of ability. So, are there any other players who can compete with us or?
So we have another big player in India, and that's the world number two player having their Indian subsidiary at Ahmedabad. We do have them. I mean, they have capacities, world over capacities, which are little higher than ours, but the Indian capacity with their Indian counterpart with Sigachi is lower.
Okay.
Other than that, we have, of course, have certain smaller players who are catering to the smaller segments, to the other, smaller formulators or the domestic market or the not so regulated markets. In terms of Birla guys taking our services, of course, we do service them for running their plant operations, but that's for a different product category.
Okay.
That's on the operation and management part, wherein we take over their whole facility, and they provide us the raw material and the facilities and the utilities, and we make the product aligning with their specifications. And I mean, that is what is the value add, and we make it cheaper than those guys.
Oh,
We
okay.
have better yields, better higher yields,
Okay.
lower costs, and that is how the value add comes in.
Okay.
Otherwise, one can imagine, Aditya Birla or Grasim Industries handing over to a third party, and it isn't feasible until we make it better than them and at a lower cost than them. And that's what is our competitive advantage in O&M.
Understood. So one is your competitive advantage of running this sensitive chemistry and building product at a much cheaper cost. When you say you have got 60 different, products
Grades.
in MCC itself, so does it mean that we are providing customized solutions to our customers, or is it off the shelf?
Absolutely, Rakesh. You just hit it bang on. We are providing customized solution because our production only executes an order which is confirmed. We can't really make bulk order because every time based on the requirement of the customer, we have to customize the product to the needs. Now, when you make it in thousands of tons, technically it is customized, but it's bulk made. I'm sure you get that.
Yeah, obviously, meaning you need larger quantities, for a certain drug, but you need it in a certain way,
A
which you
certain way and with certain set of parameters, only then it qualifies at the customers, and otherwise we have to kind of welcome it back.
So in this case, you would be having a lengthy, period of testing or, setting up the product for the customer. So once the customer comes in with a certain specification, it is set, you would have a longer visibility in terms of what kind of production you would need to cater to them, or
No, not really, Rakesh, because this is been our core product. It's so standardized that everybody knows their part of the activity. When
okay,
the raw material comes in, the quality guys knows that he has to go to the container, break the seal open, take certain samples as per the sampling SOP, have it tested, have it cleared by the quality control manager, and then the material is unloaded. Moment the material is unloaded, the warehouse guy knows it is first in, first out basis, so he knows where to keep it, and the production guys are issued the raw material on a daily basis. I mean, it's a systematic system which just takes over. It's not really our bandwidth
no,
that
no,
we
no.
get into that
What I
detail.
was asking was, not the process, but what I was asking, suppose I'm Cipla or whatever, any drug manufacturer, I have come to you with a certain specification and you have tailored the MCC for my product.
Yes, yes.
Now, as a pharma guy, I would give you a plan that this is what I would need. So you would have a
Mhm.
more visibility in terms of what kind of revenue or volume targets you will be doing. When you would you get a longer term visibility once the product is approved, or
Yes, we do have long-term visibility. In fact, with most of our customers, we kind of have annual volume contracts.
okay.
And when the annual volume contracts are being done, of course, there is a price line also being firmed up. So
Mhm.
it's good for us, and sometimes it's detriment because certain raw material prices change. The INR devaluation did happen, and we were not really ready for it. So the
Okay.
imports came in expensive, but we had to commit to our customers. So there are situations, but somewhere it balances out because we do export back.
Okay.
So we kind of it offsets us, but we have annual contracts once things get on stream in terms of product approval.
Okay. So we expanded our capacity in like step jumps. So we
Yes.
went from 14 odd thousand to 21,000 now. So when we taken decision to expand, we already have those orders like 40-50% capacity. We already know that this is going to happen, or
No,
uh,
no, Rakesh. We don't have that, but because we have seen these for donkey's years, I mean, for the last 30 odd years, we have just been doing this. We know the trend. We
okay.
know which way it'll amplify. And I mean, this is what at my level, whereas the sales head level, he would have the, I think, customer wise, broken up customer wise, region wise, grade wise, because he's seen the trend over the so many years.
Okay.
So we do know that, it is going to move in at a certain time, and maybe 2 years before what the capacity utilization is to be full, we need to be on a design board to plan out an additional capacity or an additional facility.
So this 25% kind of growth that we are witnessing for the last 5 years, and so what gives us visibility that this will continue? Meaning, what is the total size of MCC and what is our market share? And is the size also growing, or I mean, obviously we have plans to go to Middle East and geographically expand. So can you give us a little bit color on this breakup of 25% growth, where it is going to come from?
So it's of course going to come in from our current customers and the new customers where we connect. It's going to come in from the additional markets that we are going to explore. So I believe we have a MCC market analysis report which indicates that by 2032 the MCC market would be nearly $1.5 billion.
Okay.
That's a reasonable chunk for the world level. However, in the MCC market, market share is in terms of capacities. So if market share is in terms of capacities, because most often than not, in a growing market, capacities do get filled. So capacities is what determine your position in the hierarchy of the largest player.
Okay. So one of the questions we try to answer the question Shubham had on this thing, but he's asking that MCs is a sticky and negligible cost for the customer.
Absolutely.
So he wanted to know why exactly companies switch us for the supplies. Do they switch first of all? And if they switch, if it is a small cost for them, why would they switch unnecessarily?
So, Shubham, I think that's a very good question. Sometimes, it is a sticky nature product. A customer would not really switch until he or she has burned their fingers with the earlier manufacturer, either in quality or in timelines. That's number one. Number two, sometimes the supply chain guys are under pressure to show a difference. So though it is sticky in nature, they would kind of still have a change of supplier to show it to their bosses or to show an incremental reduction in price from party A to party B. That could be the only reasons why anybody would switch.
Mm-hmm. Okay. So, but meaning, have we seen these kind of cases for us?
Yes, I wouldn't say that we don't have such cases. I think it's
The rare
not
phenomenon.
possible that we have customers who continue for life. There are times when, for a certain period of time, the human relation between the sales guy and the supply chain guy don't match somewhere, and people just kind of contract out the quantity to any other approved vendor. But it's been mostly unlikely that we have had a switch, and even if it has been there, it has not really impacted us in terms of growth.
Got it. Yeah, meaning I can understand from a buyer's point of view, they would want to diversify their supply
Absolutely.
base little bit, and we have seen that happen. But then you stick to the people who are giving you the best service eventually. So, uh, so one of the questions which Kaustubh has is that what is the current composition of our exports in total revenue, and how much it is coming from US because of the tariff? Everybody is now scared a little bit.
Yeah.
So, how much is export and how much is
CFO, you
US?
would have the breakup of the export percentage and the US percentage.
Okay, so Mr. Reddy can take it out.
Yeah. Yeah. Can you please repeat the question?
Mr. Reddy, how much is exports as a percentage of revenue? And out of the
Almost 2/3 to 3/4, around 70% is export turnover is there.
20% is exports turnover.
Yes, yes.
And would you remember offhand how much would be going to US
US 20%.
of exports? So around
Yes.
4%.
Yeah, total overall 20% goes to US and around 16% to Australia.
Okay.
Yeah, remaining all we are exporting almost around 65 countries.
Okay. No, so what is the total percentage of exports? Is it 20%?
70%. Total exports is
So 70% is the total exports, and
Yes.
out of that 20% is going to US.
Yes, correct.
Okay, got it. So that kind of answers the question. Shubham has more intelligent questions coming up. He's saying our competitors in India have substantially earned gross margins of 58 to 60%. And so we are 50-52. So
Yeah. Gross margin is around, yes. The raw material cost is around 40%, 42, 58% is around gross margin is there.
okay, so I mean he's saying that our gross margins are slightly lower than some of our competitors. Can you think of any reason why it could be? Meaning,
That depends
percentage
upon
gross margins are misleading sometimes because as a per ton they could be different. So if you have any,
it depends upon the gross margin is always on selling price. It may be little selling price fluctuations or on higher selling price is there, then your gross margin will differ. Yeah, please.
So I also wanted to indicate to Shubham Sehgal that we need to check up whom are we comparing our competitor with. Because if we are comparing it to a company by the name of JRS Pharma and Gujarat Microvax, they are the world number two, and technically speaking, their sale price operates at the world number two level. So then it would not really be comparing apple to apple. The second point could possibly be that we need to check whether it's pure MCC pricing or gross margins being spoken of, or is it a combination of different excipients? Because there are excipients wherein the margins are better. Maybe what is being indicated in the report would be a combination of certain other excipients.
My experience is that sometimes when you go up the value chain, while you expect margins to be higher, but percentage margins are slightly lower. So maybe that's the case. So, sir, talking about, there are a lot of questions, we'll come back to them. But MCC, I just wanted to, so what are the key costs you were mentioning about, that certain products are imported and so there's a revenue, the impact of currencies, etc. So can you tell us a little bit about the cost structure also for MCC before we move forward?
The basic raw material is wood pulp, and the entire wood pulp, the raw material, we'll import from outside India, like the countries like US, South Africa, Canada, Switzerland, US. These countries will import. So that is the basic, almost 40% of the total revenue. It is the cost of the wood pulp. And the remaining all, that is because it impacts the foreign currency fluctuations also. Basically that is imported and we need to pay in dollars, and the impact of currency fluctuations would be there on that.
So what is the size of the consignment that we order, and do we try to do a similar, like longer term contract to match our,
yes,
sales?
yes, yeah. And in our total requirement of annual requirement, we'll go for 70% we'll go for AMC, annual contracts would be there, and 30% we'll go for the opportunity purchase. And even though our raw material, entire raw material we import outside India, the sales also is a considerable portion is there. Export revenue is there 70%. Suppose if you take 100 rupees is the total revenue, in that 40 is the import cost will be there, which will be there in Forex outgo, and 70 rupees is inflow is there. Out of total 100 rupees sales, 70 is the export sales, 70 is the Forex revenue would be there, and 40. There is a natural hedging, of course. And coming to the material requirement, 70% will go for the AMC. Whenever there is a price increase is there, they are ought to supply as per our requirement. And if there is a decrease in price, we'll go for the opportunity purchase, and we'll not buy from the regular suppliers, and we'll buy from the other suppliers where we get the lesser price, the prevailing market prices.
Okay. So Kaustubh has a very interesting question. He's saying that are we looking at some non-wood based MCC production? First of all, is it possible? Like he's asking products like straw and other.
That's right. So academically, this is possible. We have papers which have brought out that cellulose can be produced from different sources. However, in the pharmaceutical industry, for the purity of the product, non-wood pulp based MCC is not really prevalent.
Okay. Got it. Kaustubh has another question. He is asking, what is the concentration of value-added product in future? So we have those 60 products. Is there any grade that certain things are much more value-added? And what is that proportion? And is it changing going forward?
So I think that's a very intelligent question. So we have always been indicating that there are certain value-added products, and we classify them as special grades and co-processed grades. Co-process is when you take in two products, 1+1, wherein the actual value add in terms of functionality doesn't add up to 2, but it actually adds up to 11. So co-processed are kind of the darling of the formulation industry because their productivity improves,
Okay.
their rejection rate drops, and everybody is looking out. And it's good for us because effectively, I mean, on a per kg basis, co-process, the margins are far better than our standard MCC products.
Got it. Now, people are already doing some maths over here, and they are saying that, we have added 7,600 tons, and the current utilization was 25%. And we have projected that we'll go to 80% by Q4 FY27. So he's saying that may not be enough for 25% growth that we are talking about. And so clearly there are other drivers also beyond MCC probably. So can you touch upon, what extra between like the APIs or the CCS?
So, I would say to the whole audience here, let's separate the growth drivers to our core product and everything else. Now, in the core product, earlier we had envisaged whatever is the timelines for our capacities to be full. But right now, what I see is probably we'll be advancing these quarters a little more, maybe 2 to 3 quarters, it might be advanced. So we might, actually speaking, we should be sitting on the drawing board and working on a new project for MCC capacity. As and when it is mature enough to be declared, we would come out and declare as to what is it that we need to, because for a MCC project to be, at commissioning and production stage, it takes anything between 18 to 22 months. So we would need to kind of build up on capacities, considering that our capacity utilization rates have shot up. In terms of growth, I believe there is enough market, there is enough sponge in the market to absorb this additional growth, not primarily in the pharmaceutical industry, it's also in the nutraceutical industry. There are some grades which also go in the cosmetic industry. So it's a combination of a lot of things. The same capacity in a different industry, which is in the food industry, also goes in different physical form. Chemically, it is the same product, but physical form is different because it goes in as a digestive aid, as a non-calorific food additive. So all these are growth drivers for the cellulose product.
Okay. So, sir, from what I understand, you are saying is that apart from the pharma, there are multiple use cases for MCC, which might mean that we need to advance our capex program because demand could be much higher.
Much higher.
One of the questions, Unnati is not able to come to this fact that 95% of the drug is MCC, but it accounts for only 5% of their cost. So she's saying how she's not able to really make sense of this.
Yes, I wish it was a case wherein we were 95% of the formulation and 95% of the cost. But
Yeah.
unfortunately, for the kind of input material, for the kind of industry dynamics we have historically seen that excipients, not just MCC, it's excipients, because excipient could be a combination of binder, glidant, lubricant, disintegrant. They're all mixed, wherein cellulose is the biggest chunk. Now, excipient constitutes probably 15 to 17 to sometimes touching 20% of the overall cost. It could be varying based on the API cost, because there are some APIs which are very expensive. Now, in that, if I put in my excipient kind of price, still remains in the same range, but the API cost changes from a 20,000, 30,000 to a 1.2 lakhs. So there, the percentage will drop in drastically. However, the industry dynamics and the way the API industry is, the excipient continues to be a small part of the overall formulation in price and a big part in the weight.
Okay. Yeah, that makes sense. Anupam has a very technical question. He's asking, what is the yield from the wood pulp to MCC, and then to further up the value chain like CMC, CCS, SSG? So, though I
In
can't make out
MCC,
anything about these
yeah,
acronyms, so I just leave it to you to answer.
thank you.
That's okay. I think we have it documented where the pulp yields are in the range of 90%.
Okay.
So, that means whatever is put in, we effectively get 90% output, which converts to MCC.
Okay, so there's hardly any wastage, like 10% goes waste.
Yes.
Yes, so that's the chemical nature of the depolymerization, that there is a certain drop in the yield, and I think it is across the industry.
Okay. And then when you go up to CMC and CCS and all those,
So CMC and CCS is actually a different process. So I wouldn't correlate this yield to a carboxymethyl cellulose or cross carbamylose sodium, because that's a different chemistry of cellulose. So actually, I would say it's non-correlating.
okay. So Anupam's other question is about the client concentration, meaning what would be the percentage of sales for top 3 or top 5 customers? You sell to so many countries and so many 500 plus customers. So is there any concentration risk here?
The percentage wise, top 5 customers is around 35% is there, and top 10 customers are around 50%.
35% is top 5. So not that concentrated. So basically, okay. So now coming to CCS, what are our plans and what is this product? Meaning, in a layman terms, we know it is opposite of MCC. So if you can just tell us what exactly it is.
Yes. So what you speak is absolutely right. It's opposite of MCC. MCC is meant to bind the tablet, and cross-carbamylose sodium is meant to break up the tablet, disintegrant. It is the category of CCS is it's a disintegrant, whereas the category of MCC is that it's a binder. So disintegrant also is part of the cellulose family, cross-carbamylose sodium, and it is kind of coming in from the pulp itself. So across the industry, most of the manufacturers of MCC are also looking to expand and grow into CCS, because the raw material purchase remains the same, the customer profile remains the same, the category of the excipient umbrella remains the same. So it's natural that one would grow into from MCC to a CCS. However, CCS market is still smaller, I mean, in terms of quantity.
Okay.
If one would, I would say a CCS in a tablet weighment percentage would be around 1%, 1 to 2%.
Okay.
So it is considerably smaller.
Okay.
So volume wise, it is far smaller.
And the margin wise, etc., it is similar to MCC or is it different?
Yes, margin wise, it's better.
It's better. Okay. Understood. So what are the plans here? Are we looking to add any capacities? What is our current capacity and how much can we go to? What is the demand kind of?
So we have scheduled a project for 1,800 tons per annum of CCS.
Okay.
We are waiting for the environmental clearance from the Gujarat government.
Okay.
The site is in place, the boundary wall, the non CCS activities have already commenced at site. The moment we have environmental clearance, we should have it up and about.
Okay. So what kind of top line would this 1,800 ton would generate?
So I think we'll have to put in some maths. CFO, can you just work on it?
Yes. This what kind of? Can you please repeat?
Top line. What is the kind of sales we can have from the 1,800 tons of CCS?
Around, it is 90 CR would be there on full 90 crores.
90 CR, you're saying? And
Yes.
what will be the total capex, sir? Mr. Reddy, if you can remember.
Yeah, capex it is roughly, it is also coming 85 to 90 CR.
80 to 85 crore?
85 to 90 CR. 90
Okay,
CR.
so around one time asset turn we are talking about. And
Yeah.
since sir has already indicated margins are better, so I'm assuming it's better than 25% somewhere for.
Yeah, it is the CCS even more than around 30%, even
Okay,
more
so
than
reasonably
that
very good
also.
margins.
Yes.
And so the payback should be really fast. Okay, so what is the competition in CCS and how much more demand can we look at? Is the same
So,
customers who are demanding the same, additional product from us, or?
it's a factor of the pharma industry growth, pharma and the nutraceutical industry growth. As the pharma and the nutra industry growth grows, this will grow as well. So I don't see that as a very big challenge, primarily because we have had established relation with our customers, and when from the same customers, I mean suppliers, when we have a new product, customers out of goodwill do test it, and when they test it and they find it comparable to the leader level quality, they would want to switch. Of course, we give them good commercial benefits, and I mean basics of what business is.
So from what I understood from you, that MCC is 5% of the drug. This thing, CCS is 1%
No, MCC is nearly 80%
of the volume.
of the total weight.
Yeah. So I was saying from a value perspective, it is like 5% or
Yes,
something.
yes. Value perspective, it's around 5.
And CCS is like 1%.
The weight wise. So,
Weight.
we don't really look at the value part of it. Our thoughts are always on the quantity of the consumption which goes into a tablet.
Okay. So
Value
weight
is a
wise, it
factor
is
of
only
only-
1%, you are saying, CCS.
Yes,
No,
weight
in
wise, it
tablet,
is just
in
1%. 1 to maximum, sometimes 2.
Okay. So in any case, 1800 ton itself is a large capacity then.
Yes, 18. So, I mean, I wouldn't correlate it that way. If we can grow at the same pace at what MCC has been growing, probably in 6-8 months down the startup and commercialization, we would again be at the blackboard, the design board, to add in capacities for the current facility. Naturally, I mean,
Okay.
that is basic business sense.
Got it, right. So, and when is the timeline, Mr. Reddy, do you have any timelines to share for this product, CCS project? I mean, obviously, we are
CCS.
waiting for approval. We can't say government can take, delay.
Yeah,
But
another
what is our
2-3
internal expectation? When should the plant be ready and all that?
So I believe that by October 26, we should be in commercial mode.
Okay, so that's not very long.
Like
So
it's
another
around 18 months.
18 months
18 months.
from here on,
Yeah.
including the approval and putting up the facility and everything.
Yes, including everything, because commercialization is having
And
everything in
will it
place.
take 2 years to reach full capacity of 1800 ton, or it will be happening faster than that?
It will be happening faster than that.
Okay.
Definitely faster than that.
Okay. Okay. So Anupam has a question about the pricing. He's saying, is CCS a 800 rupee per kg product?
Yeah, 750, around 750.
750. And CMC is saying around 450 to 500.
No,
CMC is
CMC is not in this price. So I would just like to tell Anupam that these are price points which might probably be available on the database. However, there are various grades of CMC. There is
Okay.
low viscosity, medium viscosity, high viscosity, very high viscosity. I mean, purity levels are different. Same is the case with cross carbonyl sodium CCS, where the disintegration times are different. So there is no two product which are comparable on price because their underlying qualities differ.
Yeah, I mean, he was just trying to do the maths, 90 crore divided by 1800 ton. So that came to 500 rupee. So with the
yeah, in 1800, we cannot take full the optimum
because it will
capacity.
be like
We can take
80%
90%.
capacity utilization, then it
90%.
will go to 600, 700.
Yeah, later on we can extend, but okay, initially we can take total capacity, installed capacity multiplied by
Let me
90.
also take one more literary question which Anupam has asked, which is, now he's saying that 1 kg of wood pulp plus reaction steps in MCC plus ECH plus acetic acid is equal to 0.9 kg of CCS. So 1 kg of wood pulp plus whatever acetic acid, etc., gives you 0.9.
Anupam, I'll just tell you, right now we're only discussing MCC. CCS chemistry is not really being done because the plant is not yet commissioned. So anything to do with CCS maybe probably be put aside for the next round of discussion. But in MCC, we have 90% yield, wherein 1 kg input comes out with 900 grams of output.
Okay. So CCS or any other thing that we need to discuss, or shall we? I mean, it's a little bit far. and we have the broad
We could
numbers.
probably move to O&M. I just saw that there are a couple of
Yeah, there are a lot of
questions.
questions on O&M. So
Yeah.
let's move on to O&M because that is one category we are doing really well. So, sir, can you tell us? I mean, you did tell us that our USP is that we are able to produce at a cheaper rate than what the plant owners themselves can do. So,
Yeah,
can you
yeah.
tell us how are these contracts? These are long-term contracts. Um, how does the economics work here?
So primarily, these are all long-term contracts touching 5 years. Initially, sometimes we have seen some of our customers contract out for the first 3 years, but customers have seen that it's to their advantage that they do it for 5 years because the moment there is a renewal, there is a bigger price escalation than what is on an annual basis. So we have seen contracts go on for 5 years, and our USP has always been that we give them peace of mind, giving them better yields and lower cost in terms of electricity, water, steam consumption.
Okay. So these are, meaning, which was the first client and are they still continuing? Have you renewed any contracts which have gone beyond
Oh,
5 years?
oh yes, yes. Gujarat Alkalies in Dahej, Gujarat. I think we are in 14th year of service, and we have only expanded. We started with stable bleaching powder. We moved to polyaluminum chloride. We moved to hydrogen hydride. We moved to, chloromethanes. There in the local GACL, it's a state-owned entity. So there is a saying that Sigachi to hamari naukri le jayega.
Okay.
But
So,
I mean, we are in good terms with the people because there are a lot of people who have wanted to leave and then they have switched and they have joined in Sigachi team. So I mean, people do speak all such things in the lunch rooms, but I think it does indicate the growing level of comfort of the GACL management on Sigachi O&M team.
so the contracts here are, sir, as a percentage of revenue or is it like per
So,
ton?
it's per ton.
It's per
It
ton.
wouldn't be on a
Okay.
percentage of revenue because that would make it very complicated. So
Okay.
it is on a per ton basis of the product which clears quality.
Okay.
Yeah, it is purely based on output. If it is
Okay.
linked to revenue, again, that has to be sold and linked to sales. Even if it is whether sales happened or not, based on output, that will be paid to us.
So I would just like to add in one more point. In O&M, what we have done is we have changed our gear, and now because we have a very strong team in Middle East, and most of the operations in the Middle East, whether it's a chemical facility, pharma facility, or oil and gas facility, are run on O&M.
Oh,
What we are looking to do is we around a year back we did sign up 2 joint ventures with our Sigachi Mina team, and what we are looking to do is through their extensions get into the O&M of the local industry there. First,
okay.
we explore our strengths, and gradually, as we build up local competencies, we move from our strengths to diversified industry, and then move on to anything else which aligns with our strength.
Okay. So what is the kind of scope are we looking at? Meaning we are growing at more than 30%, I think, over here in
Uh,
O&M.
no, in O&M, we are still having the technical part of bids and technical diligence going on, but we haven't really had any O&M contracts out of India. I mean, Middle East is a region where we are exploring actively. We are
Okay.
looking at certain assets which could be handed out to us basis the kind of technical and commercial discussions, but we are yet to have one.
So
In
in terms
India,
of,
we are growing around 20 to 25%.
so in India, do we have enough visibility that will continue to grow at that pace? Meaning, how do we,
Yes,
one of the
yes.
questions is how do we target, these O&M customers? Uh,
I agree. It's not a very mature industry, but there is word spread in the heavy chemical field that Sigachi is a trustworthy and competent player. Not really the O&M guy, but real competent player who can bring in more value than the team itself. So people are handing out the complete contracts to us.
So these are
It's a
limited
very
to
slow
chemical
process, though.
processes only, or is it anyway, like here Shubham is saying that we mentioned on the call, we also want to do like solar plant O&M. Is
So
it some?
solar plant O&M is already part of our list. We are, I mean, Adani Group is our customer in Mundra for the solar power plant.
Okay. Okay. So our O&M thing is not limited to the chemical per se. We can run any manufacturing or utility
So
kind of.
I wouldn't say
ONGC
I
also.
think any manufacturing I think would be a bit too much for us. But I would say that our specialty lies, of course, in heavy chemicals, light chemicals, fine chemicals. It also lies in certain utilities like the power plants. It lies in oil and gas. ONGC has been our customer. It lies in fertilizer production facilities. Basically these are all structured around our strengths which we have been operating historically.
And do we get any escalation clause? Because see, employees you have to give increases every year. But we are also like outsourced IR agency. It's very difficult to ask for any increase. So in your case, are you able to build it into your contract or?
So when we have a sign a 5-year contract, in the 5-year contract we do have an escalation,
Okay.
and after the 5 years it is subject to market conditions, that what is the level of escalation we get from our customers.
Okay. And so how many O&M clients do we have right now? I mean, currently, um, is it like
I
10,
think
20?
we are at nine or 10, but less
Projects.
than
10?
10.
Okay. I I remember seeing advertisements for Adani now to even run their cement plant. They want to give it out to people. So I was speaking to people in the industry. Nobody's daring to do it for Adani, but you are doing it for Adani. So clearly, you have to be very cost efficient.
I know. Taking the point, what you speak is absolutely right, because Adani is not an easy customer to handle.
Mhm.
It can be very tough, and so I mean, we would think twice, because the scope to underperform isn't there with Adani.
That's what I was thinking. So you have to be really good to be able
Yeah,
to do that.
absolutely.
So Kaustubh has a question that what is our team strength in O&M? Meaning how many people we already have, and is there a mix of employed plus contract actual labor because
Yes, yes.
I have to keep
We have
contractual
around
labor.
around 800 odd people with us in O&M, and of course it's a mix of white collar people, blue collar people on our role, and then contract labor.
Okay. So if you can make some wins in Middle East, I think it could be a very big opportunity because
Absolutely.
we are just scratching the surface at the moment, I would think.
I would very much agree with you. I firmly believe going forward, Middle East growth is going to be the one of the additional key drivers of Sigachi India growth.
Mhm. So, would you like to put any numbers, sir? Because you're already there in now Middle East with JVs. So, do you have any plan, any number you can put out for next 3, 4 years, which we can
I think
target?
it'll be a bit too early. We did give out a number when we signed the JV, because it was part of the board meeting of the joint venture. But
Okay.
unfortunately, it didn't align with that. So at this stage, maybe I would restrict myself, because I wish I could put on a number, because that's happiness at its best. But at this moment, I think it'll be a bit too early. Let's just start taking our baby steps, and I'll definitely come back to all our investors as to what is it that we foresee, because I think we kind of want to succeed as much, if not more, than you guys.
Mhm. And what kind of EBITDA margins we target for these contracts? Meaning, is it like high single digit or is it much more?
No, it's much more. It's usually 20% and higher. Sometimes there are customers where we manage a bit more, and sometimes there are customers where we let go a little bit more. I
Mm.
mean, we go below 20, because you can't have the best margins with a new customer. You have to let go a couple of contracts, and then kind of build up money on the added diversified areas of their own products.
I remember that ACC, the cement company, used to manage a cement plant in Ethiopia in
Okay.
early 2000.
Uh-huh,
90.
uh-huh.
So that was one of my initial experience of outsourced OEM contract. for a large plant?
I would tell you that it's not just cement plants, Rakesh. I would tell you, in fact, all the audience here, we have one of our advisors by the name of Arsh Maini, and he has been instrumental in structuring the whole business to be able to grow at the scale at which the market opportunities exist. And fortunately, he has been one of the senior management roles in Serco. Serco is more than a $6 billion O&M company in the world,
Okay.
wherein they managed all airports. They were managing air traffic controls of 8 airports in the Middle East.
Oh, wow.
So he has been at the management level of Serco. And he is part of our team looking to see which way we can win opportunities and how do we succeed. Because in an O&M, there is no scope for failure. I mean, if you get a Dubai Metro O&M contract, you can't fail there.
That is true.
So we need to structure the whole organogram and the systems to be able to scale up in line with what the opportunity is. And we have his blessings for that. And I believe that O&M is going to be a very good growth driver for us.
So Shubham has a very interesting question, which I kind of missed. That are you handling multiple plants for one client? Because as soon as they get comfortable with you, they would want to give you everything. So what is the scope among the existing clients? Like Adani itself would be so big in.
So we are handling multiple plants of one client, and in another client, when we were L1, we didn't win because they didn't want to concentrate. So I think it's a combination or it's a rule book of our customers that here we have one customer who's ready to believe and say that yes, Sigachi is good, and let's give them this particular plant as well. And on the other side, we have another customer and they say, I can't limit my scope of service providers to just one or two. I need to have more number of service providers so I balance out my risk. So it's a complicated game, but I think it's, basis the rule book what people have.
Okay. So understood. So this is interesting. Anupam had a question on Trimax. He was saying how much did we pay? What is the ROC margin? And what products do they manufacture?
Yeah, Trimax, Anupam, this Trimax is valued at 125 CR and 80% of it we acquired and for 100 crores. And the balance 25%, there is a purchase call option is there. We have an option to buy after 3 years with EBITDA multiples of 8.5 times, 8.5x.
Mhm.
And as it is, as of now, we are in the process of filing regulatory licenses to EDQM, this European markets. And right now in domestic market, we are not getting much yields and much margins, and also the even overheads. As of now, we are not getting the profits, but next year we'll get good margins.
Okay. Thank you. So that was good. So anything you want to mention on the API, this thing, is it part of this whole MCC CCS value addition, or is it something different that we are doing?
So, Rakesh, I would say it this way that, when we already have formulators as our customers and many of them with cemented relations of more than 30 years, it's but natural to work out additional products which align with the customer's requirement because, there is a platform of trust.
Hmm.
And with that, we kind of executed the Trimax acquisition. And as things move, because Trimax was primarily an advanced intermediate facility, we are moving the whole chemistry to API, which aligns and complements our excipient portfolio.
Okay.
So once the API kind of gets approved at the EDQM, we have a CEP. Most of our customers in the international market for those particular approved APIs would be our customers, and we would kind of have complementary sales happening. Basically, we would have bigger share of our customers' wallet because we would have more products which align with our customers' needs.
Okay. So I think thank you for that. So let's take some questions on the balance sheet side also. So Rushmik has asked about how much money we raised through warrants. How much of it is coming, and do we need to borrow further for our capex program for next year or two?
Yeah, yes. In the warrants, total we have issued for 286.45 crores, out of which we have received around 220 crores. Some shortfall is there, but of course we can manage with the internal accruals and all. As and when if it is required, then we'll see it going forward. But as of now, there is no problem.
So as of now, there's no need for
We can
further
manage.
borrowing.
We can manage.
Okay.
Yes.
And Mr. Reddy, can you also elaborate on the working capital cycle?
Yeah, working capital cycle, these receivables are there nearly 100 days is there, more than 100, but by March end, we wanted to bring it down to less than 100.
Okay.
And the inventory, as of now, we are holding around up to more than 2 months inventory holding is there. Inventory holding period also, we'll bring it down to 45 days or so.
Okay.
And as a strategy, we are maintaining the inventory because there is an indication that the prices of the pulp may go up. That's why we are holding. But anyway, we thought we'll bring it down to 45 days. Even earlier, it was there up to 3 months also. Now we'll bring it to 45 days or 50 days. And receivables are 100 days is there, and payables are 30 days. 100 plus right now it is around more than 2 months it is there. Even if you take 90, we wanted to bring it down to 45 days. 100 plus 45, 145 minus 30, 115 is this thing. But in going forward, we'll put it less than 100 days, the operating cycle.
And the Shumik has also one more question. What is our guidance on ROC that we are trying to aim for? Because we had a much higher ROC and it has come down because we're doing a lot of capex and everything. So in
Yes,
steady state business, where should we think? Should we go back to 20% plus ROCs?
Yeah. We hope in going forward, it will cross the 20% because right now we have already invested, but the fruits are yet to come. We have to occupy the capacities also, and on full utilization, the operating profit also will increase, and ROC also will increase.
So there are one or two questions which I think kind of missed. One is, Shubham is still not very clear that do we have expertise in API? It's a new field. So I am hoping that Trimax acquisition will help us. We got some people along with
Yeah,
it.
we hope definitely we'll get expertise in API. We are working on that, and then we have to do. Yesterday also we had a meeting, and we have it's a concluded very positively. And next year FY26 will be a best year in API for us.
Okay.
So I would just like to add here, Shubham, it is not that API is very different from excipients. In API, every API has a different chemistry. In excipients, every excipient has a different chemistry. The positive part is our customer remains the same. The second positive part on facility is our facility management, regulatory licenses, regulatory systems still remains the same. So technically, we are under the same umbrella. The chemistry is changing. In fact, I'm sure you would be knowing that Sigachi is setting up an R&D facility right here in Hyderabad.
Okay.
So that's primarily to accelerate the approval process so that our capacity utilization in the API facility shoots up.
And also to attract the talent. Talent availability also is there in Hyderabad.
Kaustubh is asking, is our market share around 4% of global demand? He has done some calculations.
So which product are we talking of?
It's probably MCC he is talking about.
Yes. So
Yeah.
I just reiterate that, in MCC, it's always on the capacities and not really on the value.
Okay.
Capacities is what actually drives us. I believe the world number one has capacities around 70,000 to 75,000 tons.
Okay.
And we are currently, our capacities are hovering
MCC.
between 22 to 23,000 tons.
Okay. So we have some catch up to do.
Yeah, of course, we have some catch up, and catching up with the world leaders is a very expensive game, and I wouldn't really want to be part of it. The world leaders have, suitcases of cash with them to throw, but whereas for us, it's not really that way. It's better to diversify into related fields and service the same set of customers.
So from what I've understood is that we are expert, kind of one of the largest in the world. on MCC. We are trying to expand the market through CCS and API and all, so that we get larger share of the drug. Plus, we have all these drivers like OEM, which could be a very big opportunity. It's already we are growing fast. So we have kind of we are in two boats which are growing much, which are doing very well. And so it looks very exciting. People are asking what could be our 3-year, shall we expect the same 5-year trend, 25% CAGR for, revenue bat to continue, or can it accelerate given that I think OEM looks like a very big opportunity?
Absolutely. You have spoken what I intended to speak. We are looking to accelerate it beyond our historical growth rates. And for that, we have certain key drivers in the Middle East, and we should really shoot much higher than the CAGR of 25, what we have been doing over the last couple of years.
Very good. Before we let you go, Shreyans has asked one question on API. Which therapeutic area are we targeting? Because API market is very fragmented.
Yes, I think that's a very fair question. Primarily, it's antiviral, anti-diabetic, cardiovascular, antihistamine. These are some of the things on an immediate basis. What is it that we could sell today? In terms of what are the kind of groundwork we are doing for having new products registered, I think they are more over and above these therapeutic segments.
One question I purposely left it, which was the near-term pricing on MCC. If you want to speak anything on the near-term outlook of MCC, I mean, is the pricing going up or going down, or
I think in the domestic market, the prices will move up because the rupee is depreciated. It has to show on the pricing of the rupee. In the international market, I see it more or less a bit stable. I don't see it fluctuating or being volatile.
And once a final question on that US tariff, everybody is worried. Not sure whether it will come or not come. I'm hoping Mr. Modi will be able to manage through. But are you worried on anything on US tariff? Is it an opportunity or threat?
I'm not as worried. In fact, we are having certain plans. The plans might take a couple of years to fructify, but I'm not as worried because whatever are the plants, manufacturing facilities of MCC in the US are very minuscule in terms of the requirements.
Okay.
So there would be a need to import. That's number one. However, as a trusted supplier to a lot of our customers in the US, we are working out certain things to see how is it that we could support them. Primarily because we have our pulp coming in from the US markets as well. So if the pulp is coming in from the US markets, the finished goods is going back to the US markets, and there are tariffs coming in, then it makes, there is common sense in doing something. We are exploring that option, and we're waiting for Trump to be a bit more, calm and cordial and speak out what makes sense.
Yeah. So before we go, Shreyans Jain is asking API margins will be better than excipients.
So, yes, in a
Yes.
matured API market for the regulated industry, it is, of course, going to be better than excipients. I have said earlier that we are looking at a 25%, EBIT margins for our regulated excipients at least.
Okay. And Shubham doesn't want to let you go before asking how much revenue will come from Middle East JV in 26 and 27.
So it's actually a forward-looking statement, and sincerely, because we have committed earlier and we slipped what we spoke on, it will be a difficult thing to speak up. But be rest assured, gentlemen and ladies, that the moment we have some guidance and we have a broad thought, we will come back to you and declare it in the market because that's the most appropriate thing to do.
So once we sign the contract, how long will it take for us to actually turn it into revenue? Because we, probably sign up somebody. We need some period to build up the team and take up.
So that's right. It's usually 60 days extending to 90 days. And even in that period, there are certain revenue structures which come in.
Okay.
Because you are putting the team in place, you are kind of taking over the equipments. So there is a structuring happening. It's not really the full-fledged revenue stream, but it's kind of starting up.
Okay, got it. So, okay, so Shubham, don't worry, you will get some revenues in FY 26 and 27. Let's hope it's a big one. So So I think, thank you so much, sir. Would you want to make any concluding remarks before we go?
I think I've spoken a lot in terms of what is it that you should be expecting in the future. What I would just want to tell that, the growth story still is ahead of us. Whatever is behind us historically is there, but the actual growth is just going to happen.
That's a big statement. So
Absolutely.
thank you so much, sir. Thank you so much. It was really, really wonderful to understand. And
Yes,
what you're
so
doing
good
is really
connecting up with
commendable.
yes, so good
It's not
connecting up with
easy.
the Go India team. And thank you so much, audience and the investors. Delighted to be talking to all of you.
Thank you so much, sir.